Welcome to Retirement Rescue Radio, a show specifically designed to help retirees and pre-retirees maximize their financial efficiency so you can live the retirement lifestyle you've always imagined. Your host is Nate Miller, investment advisor representative and author of the CPR Retirement Rescue Roadmap. Nate discusses thoughts and ideas from some of today's most knowledgeable professionals in the field of finance. He offers strategies along the way to help you make better financial decisions so you can maximize your retirement. This is Retirement Rescue Radio.
Well, hey, everybody. This is Nate Miller, your host of Retirement Rescue Radio. And we've got another episode here, and we're going to be going over another principle or another chapter, another idea from the Psychology of Money book. And I'm going to title this one, Enough is Enough Already, or maybe Enough is Too Much, or maybe Enough is Never Enough. We'll pick one of those titles, but there's a whole idea of how much money is enough. We've heard all the time, you need to have $1 million to retire. Well, I mean, if you want to live on, $200,000 a year, maybe you're going to need more. Or if you only have to live on $50,000 a year, you've got Social Security and pensions and stuff like that. Maybe it's too much, right? And so this idea of enough, again, it's not a number. It's not. I even think that if I can show you all the spreadsheets, all the software programs, everything to where you have enough money to last the rest of your life, you still might not feel that way. And so enough is not a number. Enough is more of a feeling. And we're going to go through a couple of examples here of when enough wasn't enough and it got these people in trouble. And so the first one, there's a story that John Bogle used to tell. So John Bogle was the founder of Vanguard, recently passed away. But he told a story that highlights this very thing. And he said it was a party that was given by a billionaire on Shelter Island. Kurt Vonnegut informed his pal Joseph Heller that their host, who was a hedge fund manager, had made more money in a single day than Heller had earned from his wildly popular novel, Catch-22. And Heller responded, and that's over its whole history, not over a couple of years, over the entire history, the amount of money that the book Catch-22 has made. This guy has made that, this billionaire or whatever, hedge fund manager made that in a single day. However, Heller respond, yes, but I have something he will never have. Enough. I have enough. And so it's a critical element in our society, and many of the wealthiest and most powerful among us seems to be no limit on what entails enough, right? However, I remember and like I said, enough can be different for everyone, because I was asked a question at the very last job I ever had. It was the job where I was consulting financial advisors. And so this was the last job interview that I was the one interviewing. And it's now I'm the one being the interviewer, not the interviewee. So this was the last time I ever had to be an interviewee. And I don't remember really any of the other questions. I remember the very last question. It's the only question I remember in the entire interview. And it was, how much money do you think is too much money to make? And my response was, I don't think you can make too much, because if you make more than you need, you can give the rest away. And one of the interviewers, all right, that really hadn't been doing any of the talking, he was just one of the founders of that company, really hadn't said anything after hi and nice to meet you. He hadn't said a word during the rest of the interview. After I gave that answer, he just goes, I'm good. And that was when I knew I had nailed that interview. And I did get the job. So however, enough is going to be different for everybody. Like I said, because what if you only want enough to live off for the rest of your life? Then that's going to be a different feeling and a different number than, let's say, for example, one of the things I kind of told myself when I launched out into my business and completely cut ties with the consulting firm and decided to be full-time as an advisor, I had told myself that there will be a day when I will tithe what I made my last year at my job. And now I'm not there yet. I'm not there yet. But I plan to be there. And is that going to be when I stop? Is that going to be when I'm done? No, it's not, because that's not the number. That's not the feeling for enough. So in that case, the enough is not just myself. It's the ability to give back. And so it involves more than just me. So everybody's enough is going to be different. So I'm going to give you a couple different examples here. One, this guy's name is, I'm going to probably mispronounce it, and I apologize to anyone who may have been born in Kolkata. His name is Rajat Gupta. And he was orphaned as a teenager. And I know how people will talk about the privileged few that were born with the foot on third base, right? Or maybe they're, leading off third base and they're already a quarter of the way home. And people can talk about, if you're a white male in America, well, shoot, even if you're born in America, you're probably already on first base, if not second base, right? And then, if you're a white male, and there's so many, we can go into the whole cultural discrepancies and socioeconomic stuff if we want to, but that could create a comment thread like Facebook, and we can just go downhill fast. So we don't want to go there. But would it be easy to say that some people, or if you're going to run a race, you're going to run a 100-yard dash, some people might be starting at the starting line, some people might be starting at the 5-yard line, the 10-yard line, that maybe they're starting 20 yards ahead of everyone else. And, so therefore they have a head start in the game of life. Absolutely. That absolutely people do. I'm not going to sit here and say that people don't have that. So in this case, Rajat, if he was, if some people can start their life on first, second, third base or something like that, well, Rajat wasn't even living in a city that had a baseball stadium at this point. So definitely in a third world country, orphaned as a teenager, he is not somebody that you would think would end up being wealthy. But he went on to achieve, from those simple beginnings, went on to achieve something extremely phenomenal. By his mid-40s, he was CEO of McKinsey, which was the world's most prestigious consulting firm at the time. And he retired in 2007 to take on some roles with the United Nations and the World Economics Forum. And he has partnered on philanthropic work with Bill Gates. If you're partnering with Bill Gates on trying to give money away, you kind of made it when it comes to making money, right? He was on the board of 5 different public companies. And so from the slums of Kolkata, Gupta had quite literally become one of the most successful businessmen alive. And with that success came enormous wealth. And by 2008, he was reportedly worth $100 million. And it's basically a 5% annual return on that much money would generate almost $600 an hour, 24 hours a day, 365 days a year. Yeah, $600 an hour. That's it. It's crazy. And so he could have done really anything that he wanted to in life. And what he wanted, by all accounts, was not to be a centimillionaire. He wanted to be a billionaire. He wanted it more than anything. He wanted to be a billionaire. And he sat on the board of directors of Goldman Sachs. So that surrounded him with some of the wealthiest investors in the world. And one investor cited the paydays of private equity tycoons. He described Gupta like this. He said, "I think he wants to be in that circle." That's a billionaire circle, right? Goldman is like the hundreds of millions circle. So he's at Goldman Sachs, and he's only in the hundreds of millions circle. He's not in the billionaire circle at that point. So he wanted to be in the billionaire circle. So he found a lucrative side hustle. In 2008, he started. Let's see, in the wrath of the financial crisis, Warren Buffett planned to invest $5 billion in Goldman's bank in order to help it survive. And as a Goldman board member, Gupta learned of the transaction before the public did, and it was valuable information. Goldman's survival was in doubt, and Buffett's backing would surely send its stock soaring. 16 seconds after learning of the pending deal, Gupta, who was dialed into the Goldman board meeting, hung up the phone and called a hedge fund manager. And the call wasn't recorded, but the hedge fund manager immediately bought 175,000 shares of Goldman Sachs. So you can guess what was discussed. And so the problem was, Rajat basically made a quick $1 million from that. But that was just one example of an alleged trend. The SEC claims that Gupta's insider tips led to actually $17 million in profits. $17 million. Now, remember, he was like worth $100 million. And this only made 17. I say only made 17, but when you look at the proportions, he already was worth 100 million. He wanted to make, made another 17 million. But it was easy money for him in this case, but the problem was it was also easy for prosecutors, because that's what we call insider trading. When you have insider knowledge like that the public does not have, that is insider trading. And so both Gupta and Rajat, the hedge fund manager guy, I cannot pronounce that name, Rajat Ranaktam. I'm sorry. They both went to prison. And so here he is having $100 million, and he risks all of that for another 17. Doesn't make sense, does it? No. And now consider, Bernie Madoff. That's like probably the most famous name when it comes to fraud in the financial industry. And I think he's more synonymous with Ponzi scheme than Charles Ponzi that actually created the name, right? And so what's overlooked about Madoff is, like Gupta, he was more than just a fraudster. Before the Ponzi scheme that led Madoff to make him famous as the fraudster, he was a legitimate businessman. And Madoff was what's known as a market maker. And it's a job that matches buyers and sellers of stocks. And he was really, really good at it. And the Wall Street Journal actually described Madoff's market making firm in 1992. They said he has built a highly profitable securities firm. Bernard Madoff Investment Securities is the name of his company, which siphons huge volume of stock trades away from the big board. The $740 million average daily volume of trades executed electronically by the Madoff firm of the exchange equals 9% of the New York exchanges. So he was making 9% of the trades that the New York Stock Exchange was making. That's a lot of trades. That's a lot of trades for just one firm to be doing. Right. And so his firm executed trades so quickly and cheaply that it actually paid other brokerage firms a penny a share to execute their customers' orders, profiting from the spread between the bid and the ask prices that most stocks trade for. And so what's funny about this, so this guy, he was making his legitimate business was earning him anywhere from $25 million to $50 million per year. His legitimate business. Let that sink in for a little while. His legitimate business was making between 25 million and 50 million a year. Why the heck did he need to go and do the Ponzi scheme, the fraud? Why the fraud? Why in this case? Anytime, and obviously you can imagine when I'm consulting financial advisors all across the country, a lot of them will send articles to us, and I would see article after article of different financial advisors in different parts of the country that would be caught into some fraud. Now, none of them to the level that Bernie Madoff was, but they would always be caught into some, whether it's, $500,000, $1 million, $2 million, $10 million, whatever it ended up being. And I'm just looking at those articles going, there is so much money that can be made in this industry by doing things and helping people the right way. Why would somebody want to do something like that? Why would somebody want to defraud someone? It just, one of those things, the psychology of money in my head cannot fathom that. And so that's one of the big issues there. So here's something that Warren Buffett has even said. He says to make money, and this is how he put the issue that both Gupta and Bernie Madoff had. He said to make money that they didn't have and didn't need, they risked what they did have and did need. And that's foolish. It is just plain foolish. If you risk something that is important to you for something that is unimportant to you, that just doesn't make any sense. So there is no reason to risk what you have and need for what you don't have and don't need. Very well said there, Mr. Buffett. So one of the hardest financial skills is really to get the goalpost to stop moving. Here's what's happening. If somebody's making $50,000 a year, what do they want to make? They want to make 100,000. And guess what they want to make as soon as they make 100,000? They want to make 200,000. So if you've got, say, $500,000 saved up, what do you want to have saved up? You want a full million saved up. And so when does the goalpost stop? That's a hard thing to do. Enough is enough. Happiness, as it said, is basically just results minus expectations. And I can even say that this in my own life when it comes to movies. I've seen several movies where I went into the movie not really having any expectations. It's basically like, all right, this is kind of a brain dead time for me. It's like, I kind of want to just shut my mind off and just forget everything else. And I go in not really expecting a whole lot other than just maybe 2 hours of mild entertainment. And some movies have blown me away. I've been like, wow, I was not expecting that to be good, but that was awesome. The first Guardians of the Galaxy movie kind of comes to mind. I was a big Marvel fan with all those Avenger movies. And then Guardians of the Galaxy, with my kid, I'd kind of seen a cartoon or two that mentioned them in the past. So I knew a tiny bit about them, but I really didn't think they were that big of a deal in the whole Marvel universe. And that movie ended up being pretty darn good. So yeah, I mean, that was one time when I was pleasantly surprised. But yeah, that's so getting the goalpost to move happiness is results minus expectations. So if you're sitting here with $500,000 and you wanted $1 million, well, then you're going to be disappointed. But if you wanted $250,000 and you happen to have saved up $500,000 for retirement, you're pretty happy. So it's all about those expectations. And now I'm not telling everybody to just lower their expectations and settle for nothing, right? But that's kind of where the just know that it's all about the expectations. All right, social comparison. That's another problem here. And gosh, with the advent of social media, everybody's lives are just out there for someone else to look at and either be impressed by, either be, jealous of as well, could be another one. And you have to understand that anytime you're looking on social media, you're seeing everybody's front of house. You're not seeing the back of house. You're not sitting in what I mean, front of house, back of a house. Those are restaurant terms. I waited tables and bartended my way through college. And before I started doing taxes, front of house would be, the waiters, the servers, the hosts, the bartenders. Those are like who you actually see. The back of the house would be the cooks, maybe the managers are back there too sometimes, helping out in the kitchen because maybe one of the cooks, either got sick or didn't show up or whatever it was. But that's the back of the house. You don't see all that going on. You don't see them cooking the meal. You don't see it. You just see it plated up and looking nice and fancy in front of you. That's what you see, front of house versus back of house. You don't see the back of the house. You don't see everything that went into that, whatever the front that the people are showing when they post something on Facebook. And now we've even got filters to make things look better than what they really are. So you're seeing everyone's best foot forward. You're not normally seeing them post about their battles with depression, or how their marriage that might be rocky. You don't see that stuff. You see the happy stuff. You don't really see the sad stuff. And so that's an issue, right? If you're a baseball player and you're making $1 million a year, you're going to be feeling pretty worthless when you see the other guy that's making $12 million a year. So that's it. Enough might be too little in a lot of people's cases. So what we're doing here, like what we do at Miller Retirement Group, really, is we're trying to figure out whether or not you have enough, right? We are trying to put a dollar amount to the psychology that you have, and to tell someone like that. I mean, it's not going to be like a flip just got switched. It's not going to happen. If you've spent your entire life not feeling that way, you can't just do that and it's done, So that's kind of our job, is to help people realize that when they're in that situation, that they are truly okay. They do truly have enough. So now we're trying to take it from just the surface level logic and the spreadsheets and the software programs and stuff like that, and really get it inside so they can internalize the fact that they do have it done. They do have enough. Enough is enough now. They can stop worrying. They can just go back to doing what they really want to do in retirement, and not have to worry whether or not the money is going to be there in the future because they're going on a trip this year. They don't have to worry about that anymore. So that's what we do. We try to help people figure that out. Do they have, quote, enough? So I guess if you want to find out whether or not you do have the magic number of enough, whatever that magic number is for you, just reach out to us. We'll put our calendar link here in the show notes or the description, depending on whether or not you're watching this on YouTube or you're listening to it on the podcast player, or even if you went directly to the website, you'll be able to find a link to our calendar right there. Schedule 15 quick minutes. If we find out we need a little bit more, then we can either do a Zoom call, or if you happen to be reaching out to us and you are in either the Lawrence, Kansas City, Topeka markets, whatever, we'll just sit down eye to eye, actually get together like we used to pre-pandemic, eyeball to eyeball, across a desk, and figure that out for you guys. That's what we do every single day. We love doing that. And especially for those that get it, when that light bulb does go off and they're sitting there going, I just can't believe it. I'm there. It's like, I do have enough. And then they can go forward and not have to worry about retirement. So it's fun. It's fun. So that's it, guys. If you have any questions, email asknate@retirementrescueradio.com. We're going to continue bringing you content like this so that you can live the retirement you've earned. So that's it, guys. Stay tuned for next week and take care.